Okay, so we've come to our bread and butter. Our bread and butter at Marine Money is shipping finance. This is our panel. It's a big panel. I think that's great. It demonstrates the interest in the region from finance providers. Like I said earlier on in the day, I mean, back in the day, 2007, 8, 9, we probably had 15, 16 finance providers at this event. 10 years later, in probably about 2017, 18, we maybe had 4 or 5 if we were lucky. Now we're back to, well, we think double figures anyway, so we're very happy about that, and it just shows the interest in the region. So, our moderator is Ian Mace, partner, Stephenson Harwood, based here in Dubai. We have on the panel, I'll just run through them in no particular order, in the order they are on the agenda actually, Bilal, Hasan, Ashraf, Head Energy and Marine and GLC Corporate Banking, National Bank of Fujairah, a local lender, so that's extremely interesting. Mohamed Sijilmassi, who's Vice President of Finance, Treasury, Insurance with ADNOC, a massive shipping company utilizing the finance provided by some of the people on the panel. Nadeem, Samaha, Senior Executive Officer and co-founder of Bridgefort Maritime Group. Nicholas Petrakakos, Partner, Managing Director, Maritime and Offshore Investment Banking with Alantra, who are very active in this region. Iraklis Tsirigotis, Director of Origination with Neptune Maritime Leasing, again a financier, doing a lot of business down in this region. And Souren, Gharnagharian, Investment Manager, Middle East, Australis Maritime. So we're looking at loans, leases, equity, JVs, anything else you can think of, Ian, up to you. Thank you.
Thank you. Well, I won't take it personally that there's a chair next to me empty, but
I'll feel big empty.
Perfect. Well, I'm just going to ask one of my colleagues, Pedram, if you want to jump outside and see if Souren would like to join us. But no, thanks everyone. It's great to be back. I didn't know I'd relocated to Dubai, but feels that way from the amount of time I spent here. So we're going to have a canter through various sources of finance in the maritime sector in the region, both on the lending, leasing side. We're going to look at JVs as well as the equity side as well, time permitting. But from my time that I've spent in the region, if you go back a few years, the financing landscape was dominated by local banks and international banks, but it's obviously changed a lot in the last 5, 6, 7 years. With non-bank lenders entering the market. And we've got 1 or 2 joining us today. We've got Iraklis, and hopefully Souren will join us shortly. But Iraklis, maybe if I could start with you, if that's okay. Could you just maybe tell the audience a little bit about kind of Neptune's approach to the region? And I think it's going to be quite helpful to just understand some of the challenges that you've seen working in the region, but also some of the themes that, as a result of that, themes that ship owners can learn from some of those challenges and how you've overcome them.
Sure. That's my turn. Yeah. Thanks, Ian, and it's a pleasure again to be in town. Although we come pretty frequently, it's the second time on the panel. Here is also Souren. We have been quite active in the region since we started to cover it probably about 3 years ago. We have already established a number of relationships in the region. We are very happy and very keen to expand across all the different asset classes in shipping, but predominantly offshore, which is a very local business as well, and dry bulk, which there is great activity here in the region as well. So these 2 particular areas are more focused nowadays for us, especially because they have the counter-cyclical elements that we might be looking as an institution. So we are very sensitive to that. And if I look at the asset class that we cover, like tankers, LPG, LNG, in addition to dry bulk and offshore, we are quite more fond of dry bulk and offshore for further business. And as I already mentioned, the region gives lots of opportunities. It's quite in a very positive way, surprising to see so much activity and growth in the region, because as a Greek, and by sitting in Greece, which is one of the biggest shipping markets, yes, there's lots of activity, but if you ask me how much new activity, new entrants coming in the market in Greece, here it's greater, the increase. So that's tremendous news, and I'm pretty sure that Kevin will benefit from that by having larger and larger and larger events going forward. Now, in terms of, that's all the key pluses that we have noticed. Good relationship, good business. But of course, at the same time, there are some challenges, as you said. The one that I will say, it's a bit more on the news also lately. It has to do with sanctions risk. And that, kind of, it's a disadvantage for the whole community here as a whole. The reason why I'm saying that is when you get a newspaper or an online article and you say that there are new groups being sanctioned by the Western world, if I put it like that, and quite a few are based here or run from here, that kind of tarnishes a bit the image of the region. The vast majority work on international standards, and we are very happy to transact with, but at the same time, being an international business, we will get questions and being asked, okay, please check again your clients, please check again the vessels, where have they been, are you sure everything is fine? And we need to again and again and again convince them that we are doing the proper things and our partners are doing also the right thing. So that's kind of a challenge. Maybe not with all the asset classes, because there's different tanker business and dry bulk, but that's kind of one of the most recent challenges that we have to face, the scrutiny and the enhanced due diligence that we need to go through, especially to establish a relationship, and with a greater degree if we're talking about tankers.
Great, thank you. Well, let's park the sanctions point, because I think that's quite an important one, because I think it's, there does seem to be, there's obviously a lot of commentary in the trade press about it, and there's quite an element of guilt by association, which is largely unfair. But let's come back to that one in a moment, because Souren, do you want to tell us a little bit about the approach Australis has taken in the region as well?
Yeah, of course.
Just put your mics on.
Thank you. Yeah, well, firstly, apologies about running late. I was on Middle East time, being from the Middle East. And yeah, our approach to the Middle East has been very constructive. I grew up here, I came back here 3 years ago, and we've been doing business here across the various sectors of shipping and offshore since before COVID, really, since the platform was launched in 2018. And our approach here has been across the board, not only in terms of which industries we work with, but really in terms of which ship owners we work with. So we've done financings for very large, established and active ship owners, as well as first-time ship owners, not only small and medium, but literally first-time ship owners who, with our financing, have vertically integrated from commodity trading, for example, into becoming ship owners. And what we found is having a boots-on-the-ground approach is very helpful. We found that it helps work out through some sticking points, and we found the patient and personable approach as an approach that one must adopt here, as well as the ability to handhold some of the transactions, the ship owners through or the prospective ship owners through the transaction, because for quite a few of the deals we've done, we were dealing with owners who are established but have never done financings, or first-time owners, as I previously mentioned. Yeah.
And I guess, I mean, you've mentioned small, medium-sized first-time owners quite a few times there, and you personally being on the ground, being able to have some of those difficult discussions. Again, what are some of those, maybe not difficult, sticky points? What are some of those kind of discussions that you've had with customers of that nature, and what solutions have you actually found to enable the capital that you have to be available to them?
Yeah, I mean, again, parking the whole sanctions topic on the side, because as international financiers, that's a very easy conversation. It's a black or white. There isn't really a gray area there. But some of the points that come up again and again have been the flags of choice and the jurisdictions of choice for the SPVs owners in this region, and when I mean this region, I don't mean only the Middle East, but also India, do sometimes get preferential access with certain flags, but international financiers typically work with a certain set of flags and jurisdictions for the ship-owning SPVs. Another conversation that typically comes up is the choice of the law firm. Again, global law firms such as yours is very well accustomed to dealing with the financing documents, be it a loan or a lease, and it becomes a very efficient, smooth process if the choice of the law firm representing the owner is a established law firm. And it helps actually meet the owner's requirement in delivering funds quickly so that they can execute on their SMP process and not get hung up on some of the legal docs that govern the transaction. So I think these are sticking points rather than challenges per se. And being here and facing them across the table, speaking the same language, has been very helpful in getting across the sticking points.
And before anyone asks, I didn't actually ask Souren to say that you should all be using Stephenson Harwood, but please do so. Dinner's on me later.
And if I may add to one point, which about the sticky points, it's what also still it's a point of discussion again, the charter's convenience clause in certain cases, especially for the long-term charters. That's kind of, a very local element that we'd get to see a lot. And at first we hear like long-term charter to this oil major. And then when you read the document, you understand that probably it's like a daily rolling contract rather than a 5-year contract. But that's changing. It's the first time we heard 2 new charters to be awarded that are without charter convenience clause and that are very long-term. So that's a very bullish sign. Because for an oil major to go to do this extra step, remove charter convenience clause and go long term, you can imagine what they are seeing in terms of future demand of vessels.
If I may, yeah, I can echo that absolutely. We've seen a couple of deals on the offshore side where the termination clauses are no longer there. And that helps unlock easier financing, obviously. And the pipeline has been dominated by offshore for us. So we took comfort in financing offshore vessels and ship owners operating in that sector, despite having those clauses. But this, again, brings a more constructive outlook for the sector when you see the charterers removing that clause. And admittedly, the pipeline today, for us at least, is starting to become more diversified. So just like Iraklis said, we see more and more dry bulk at levels that we could work on. Offshore remains to be quite active in this region where I'm responsible for. And yeah, unfortunately, tankers become more and more challenging. Despite working on some tankers, a large portion of the tankers we see are not tankers that we could work on.
Great, thank you. Well, I think that gives us a good flavour of what the non-bank financiers are doing in the region. So maybe Bilal, if I could turn to you now, if that's okay, because there is a little bit of perception that the local banks in the region are not doing huge amounts of volume in the maritime space. Obviously, your good selves, we've worked a lot with you over the last few years and are continuing to do so. You're particularly busy. So could you tell us a little bit about your approach to the region? Because obviously, being a bank, there are going to be some differences in your approach on various things to what we've heard from Souren and Iraklis.
Sure. At NBF, we have always seen great opportunity in the maritime sector. And we have been quite active, say, from the last 21 years. So I think we are one of the few banks who were quite active on the offshore space as well. And since one of the panelists was mentioning that there are, I think, 1,200, 1,300 vessels in the region. So I think we'll have a market share of close to 25%. And the pipeline also looks quite strong on the offshore space. We are trying to pick up more on the shipping space. That's where some of the international lenders are more active on. So I think we are going on the reverse side, whereby we are focusing more on the shipping side, since we already have great visibility on the offshore, and we say that we are more expert on the offshore sector. On the banks, what I'll say is that we see some traction, some banks chipping in on the syndication and club deals, but we don't see anyone having a dedicated marine desk, except for 1 or 2 banks in Abu Dhabi. So, I mean, thanks to the international funds and the banks who are coming in this region, who can see the confidence in the offshore space, and we see that this will be quite healthy going forward, and there will be more and more people coming in this region. Also, since you were touching on the compliance issue, I think there's least compliance or sanction issues on the offshore sector, because most of these vessels are working in the restricted Saudi, Qatar, and Abu Dhabi waters. So that also, I mean, checkbox is there that, you know, these vessels are within the sanction parameters.
And when we were discussing previously, we were talking about some of the more innovative products that you've been developing over the years and using with your clients. Could you? I personally found that quite interesting because it is fairly unique. Could you tell the audience a little bit about those, please?
So I think what differentiates National Bank of Fujairah with the other lenders is that, I mean, we are more of a relationship-driven bank. It's not purely asset financing that we look into. So it's all your maritime requirements that we can cater to, starting from the term loans, the revolving term loans, the adaptive term loans, which I can explain. So apart from that, I mean, we are into shipbuilding. I mean, we are financing the shipbuilding, and also we are financing vessels for scrapping. I know that there are a lot of reservations with many lenders that, you know, I mean, it's not green and it's not sustainable, but I mean, we have a different view on that. I mean, we can have a separate session, you know, explaining as to how it is more sustainable. So talking about the revolving term loan, I think this is one of a unique product that we have, whereby you can buy and sell assets the way you want, and the lines will always be available. It's quite quick because the loan documentation is drafted in a way that you'll be able to draw down as soon as you sell the asset and settle the loan. So I think that kind of product is not available in the market. On the adaptive term loan, this is market-driven, that your loan repayments will be linked with the market cycle. So taking example of bulk carriers, when the market was really booming, we accelerated the loan repayments during that period. And when the market was soft, and that's when the loan repayments were readjusted. So how we achieve that is that we have a predefined covenants and conditions around this, which is in the term loan agreements, whereby we pre-decide as to how the loan repayments will be and what kind of market intelligence and source will be utilized in order to see as to where the market is heading to. Other than this, we have many other products, and we are always happy to hear from our existing customers as to what exactly is their requirement, and accordingly, we always are willing to design new products, and going forward, we'll be doing the same.
Great. That's. I mean, I particularly found that very interesting because, as you say, you're a relationship-driven organisation, but they're very adaptive to your clients as well. Clearly has a lot of experience in the sector as well. So I'm going to turn now to, because we've heard a lot from the financiers on the panel. I'd now like to move towards the owner community on the panel. Nadeem, Mohamed, you've very different organisations with Bridgefort, Maritime and ADNOC. You couldn't get two less similar groups. So you're going to approach, raising capital, approaching finance from very, very different angles. So I think this is going to be quite interesting just to see the complete diversity of approaches. So Nadeem, did you want to maybe just start off, please, if that's okay, just by giving us an overview of the approach that you take towards raising finance and how these types of products fit in your capital structure?
Yeah, thank you, Ian. So yeah, I think we fit into Souren's definition of probably a small ship owner, looking to become a medium-sized ship owner. So we moved to Abu Dhabi Global Markets about 2.5 years ago, primarily through the support of a sovereign wealth fund. We are very much focused on the container market. Historically, when we were at Apollo, it was containers. Now it's containers. So I think we've had limited interaction with the local ship finance community. I think they focus mainly on offshore and tankers. That's led us to rely on long relationships we've had with the European lenders, the international lenders. We try to keep things fairly simple. We like assets that have time charters attached. That helps from a lending perspective. Debt finance is key to our investment decision. A, it allows us to acquire more vessels, and B, it helps us pump up our returns. We haven't yet structured something under an ADGM SPV. We've tended to keep to the traditional, Isle of Man, Liberia structures, which, Liberian flag, Isle of Man flag, which again, lenders are more comfortable with. So given that we are relatively new to this area, I mean, my family goes quite sort of, similar to Souren, we go quite far back in the UAE. But in terms of international lenders coming in here, we appreciate that we need to keep things, fairly vanilla. And that's where we found the most success.
And I mean, you mentioned about relatively vanilla structures, and we've spoken about SPVs and things like that. In terms of the operational side, is there anything else that you've maybe needed to adapt in any way while you've been in the region, attracting new types of debt finance or lease finance, anything that you've changed operationally? I mean,
yeah, look, as I said, we try to go into transactions where we have sort of time charter revenue day one, at least for, the 12 to 18 month period post-acquisition. Because we are primarily fund-backed, we can't really give corporate guarantees. So all of our structures are non-recourse, asset-backed, so just senior secured mortgages. We operate under single SPV structures, and as just keep things very, very simple where we can. We don't over-lever, we don't try to go for high LTVs. We tend to stick in the 50 to 60%. We feel comfortable there because really we're not too concerned about the earnings day one. We focus more on the OPEX. In terms of trying to give banks and local banks more comfort, we've invested quite a lot on getting sort of that technical expertise in-house. So we now have a captain in-house. He spent sort of 10 to 15 years on dry bulk vessels and container ships. We tend to focus on the elements of the deal that we feel we can control. So we don't know where the market's going to be in 6 months, 6 years' time. So we focus on OPEX, we focus on sort of our financial controls, and we tend to go for structures, financially speaking, that aren't over-levered and that'll give us flexibility and at least allow us to make dividends up to our investors.
And then, Mohamed, would you like to give us the maybe the slightly different approach?
Yeah, absolutely. Yeah, absolutely. So I'm representing LNS in here. So LNS is the integrated logistics arm of ADNOC Group. It provides services to across the value chain of ADNOC. It's one of the biggest, it is the biggest fully integrated logistics and shipping company in the GCC, in the region. So we are quite in a different situation and much more comfortable situation when sourcing financing. In terms of ownerships of vessels, we own more than 230 vessels, charter around like more than 600. So the approach, I would say, is a little bit different, and we have been listed in June last year with one of the best, by the way, listing in the GCC, with an oversubscription that is the highest ever recorded. Now the question is, from a source of financing or financiers, we have an open book, like we're quite like flexible with regards to the source of financiers and solutions that we can have access to. And it's very interesting to see how the region has moved or has progressed within the past years in terms of financiers that we deal with, but also in terms of solutions that are available. I come from a background of very structured or exotic types of solutions, whereas like the shipping industry has always been kind of plain vanilla solutions and everything linked to term loans or RCFs or sale and leaseback type of solutions. What I'm seeing right now is a complete different background and a complete different sorts of solutions that are available to us. And also from a financier's perspective, we also have access, of course, to the banks, local banks and international banks, but there are also some new source of financiers that are coming into the region that are very eager to deal with us. So if I look at the local banks, the journey that they have been through is quite interesting because they kind of like try to fill the gap that has been quite large previously with the international banks because of their global access and the global reach overall, like in what's happening in the shipping in the world. And I see that the local banks, specifically in Abu Dhabi, as you mentioned earlier, I think they are the ones that are like kind of driving this race, and the gap is becoming much more narrower. Now, from a financier's perspective also, there is a new, let's say, pockets of liquidity that is available to us that was not available a few years back from a hedge fund community that are much more interested into shipping, and they were more focused like or kind of like a very tiny bit of their allocation that was like towards shipping that is actually becoming more big. And even from the expectations of returns that the hedge funds we used to have, or even any, let's say, infrastructure fund used to have, was in the mid-high double digits kind of returns. Now we see that it's actually getting much closer to the banks, making it an additional source of liquidity that we can tap in. Now, from my position, we are just listed. We don't have any debts. We have a lot of equity. So obviously, everything is open to us with regards to who we can be dealing with. And my priorities right now are maybe like having three main goals in my capital structure or my financing plan. Is one, having the flexibility such that whenever the growth plan of CapEx plan, the extensive CapEx plan that ADNOC LNS has announced to the market, which in reality is actually higher than whatever we're planning to, is to have the flexibility to add on new vessels as we go and as we grow. Second is with regards to pricing, obviously. So we kind of inherit from ADNOC Group, and we have this luxury to have very cheap financing accessible to us, hence putting the bar much lower and trying to get the optimum level of price. And three is to have a source of diversified products across the maturities, such that I don't have an overall like a cliff of repayment at any point in time. And I think that's with the relationship banks that we have from local international banks and even now financiers with whom we have built very strong relationship, and all the different panels and different solutions that are available to us, we're definitely like set for success.
Because I think that's something I've personally experienced during my 20 years working in the region is the nature of the financing has become far more sophisticated, as mentioned at the beginning and has been mentioned a few times. Previously, it was a lot of international banks and local banks and relatively straightforward structures. During the last few days, obviously we've got members of the panel doing sale and leasebacks. We've been talking to a number of clients over the last 24, 48 hours about doing JOLCOs, and you've mentioned institutional capital coming in. I mean, institutional capital, whether it's from Europe or predominantly from the United States, one of the fantastic things about institutional capital is it can be very, very flexible. As long as the returns are right, there's a lot of flexibility there, but there comes with it a few challenges of bringing two different types of groups together. What have you done, or how have you changed the way that you've approached some of these types of sources of capital, where you've maybe changed the way you've done things to attract that type of capital?
Well, before speaking about change, I think that the fact that we're listed since June has brought in a big amount of transparency and also like a governance change with regards to how ADNOC LNS is operating. So this definitely gives a lot of satisfaction to creditors. Now what we have changed is the approach to risk management within ADNOC LNS and ADNOC Group in general, whereby we kind of like want to control, of course, anything from a shipping space that we can control, if there is any thing that we would like to fix across a specific tenor, but also from markets-driven, let's say, outside of shipping, that could affect the profitability of any deal that we enter in. So now we have a proper risk management framework that allows us to control the risk within a specific tolerance to the risk that we would like to have that optimizes our returns. The third that I would mention maybe is the sustainability angle or the ESG angle. We had the chance to discuss it in the London, or extensively in the London Marine Money in February. I think that's the ADNOC LNS is playing a big role into whatever ADNOC Group is having as a direction towards sustainability as ESG. We're taking it very seriously. We're of course like compliant with the IMO 2045 like goals. We have reduced by 30% the carbon footprint. We have an AI, very strong AI story with smart vessels, smart ships that we have integrated into all our vessels. So I think all these story is actually something that the financiers would like to hear, specifically the European ones, but now more and more Americans and all type of financiers.
Absolutely. And we almost got through a whole panel without talking about sustainability or green financing, but not quite. But Nicholas, if I can turn to you, because when we were preparing this session, you said you wanted to talk towards the end. You wanted to hear what everyone had to say, because you're obviously involved all the way across the capital structure for your clients with, I think you work with pretty much everyone on this panel and quite a lot of people in the rooms. But the point that I was quite keen to talk to you about was the JV side and what you've seen, because obviously we've seen a far more activity on the JV side across the maritime sector, but just wanted to get your view on JVs, how they're working and what your experiences are, just to share a little bit with the room.
Yeah, of course. Thank you for that. Just to go a little bit back about us and how we ended up being involved in all these things. We started working in the region, as George said before, in 2018. Back then it was, let's say, scorched earth in terms of finance in the region. NBF was the only active bank. ADIB back then had some activity as well, but they ran their portfolio quite a bit. Since then, we've worked on more or less everything. Leases, loans, restructurings, M&A activity. And what we see lately is that there is more and more activity on the equity capital markets, if you will. That includes joint ventures, it includes M&A, it includes just raising equity for projects. Nadeem has been successful in raising equity for shipping projects, is one of the very few entities in the region that has done that. What our goal has always been for the region is not only attract capital from outside to here, but also connect the place here to the world. And I think we've done that quite successfully with NBF in several transactions, and we do expect to grow that as well. Joint ventures and equity raising in general, it's the holy grail for owners and operators in a sense. It's something that in order to enter into, it's really a marriage, right? So it has to work in multiple levels. I think the main goal of a JV should not just be scale, should be also a change on the operational side of the JV partner, especially the guys that are running, the ships are running the companies. So what that sort of capital brings into a company is really discipline, is putting processes in place and preparing for strategic goals that are set. The challenges in these JVs are more or less similar to what they are on the lending side. I don't think personally that sanction is a problem in the region more than it is in Greece, in Turkey, and other places around the world. I think the challenge here is that you deal with entrepreneurs in most cases. You deal with people that have built relatively recently companies from the ground up. They have established relationships with conglomerates like ADNOC, and you have a David and Goliath sort of situation there. So you have to underwrite people and their business plan. It's not just an asset that you underwrite, either on lending or on the equity side. We have been successful in doing a lot of M&A work here in the region, notably the combination of SMG and Allianz last year, which created one of the largest operators in the region. We're running several mandates now on both the sell side and the buy side on the offshore sector. And we're also putting together JVs, which was also your question. On the JV side, we've managed to bring capital from outside the world here for that. And the goal is for the investor to enter a market that's maturing in a sense. We talked about consolidation before to a certain extent. My view is that in the next few years we will see a real consolidation happening in the non-national oil company operators, and it only makes sense. It's only 1,200 ships. You cannot have 400 different companies running them. And yeah, so the goal of all these JVs is to establish processes to reach that consolidation plan, realize economies of scope and scale, and have sort of, let's say, vertical integration within the services you can provide to your end users. So it's something that we feel will increase happening a bit. It's still on its infancy, if you will. External capital coming into the region. But JVs in general are not something new in the region. Alcir has a JV with BGN. Nakilat has a JV with Maran Tankers. So it's something that has been traditionally used to bring knowledge to the region from outside. We have seen less of local equity investing greatly into shipping. It's not something that, let's say, is on the top of the list of, Mubadala, the big guys in the region, although they do it. Alcir is, again, one instance that it's sovereign wealth fund investing. Nadeem is another case. Bridgefort is another case. But we've seen less of that. I think shipping for that part of that sort of capital is not there yet. But people from outside the region that have already done JVs in other parts of the world, in other markets, are ready to deal with it. And especially the challenge of partnering with entrepreneurs that have been in the business for 15, 20 years, because the whole region is new. So it only makes sense that companies like this will be new. But I think whoever comes into the market now, both on the lending and the equity side, will reap the benefits of designing that market for the future. And we've been here since 2018 trying to help doing that. I think we do it successfully, and we expect to remain into that role.
And then, I mean, to my knowledge, the vast majority of JVs that are done in the region are not speculative. They are usually around solid cash flows. So therefore, putting together a JV, an attractive project, make it attractive for financing, that's presumably something you found as well?
It is to a certain extent. Cash flow is not an input in the whole calculation. In what sense? The companies, especially in the offshore sector, are service companies. So you need to have good relationships with the end users. You need to have proper processes, proper departments to run all these processes for you. And that reflects the utilization of the assets and cash flows at the end of the day. So all these JVs focus on having a proper partner that can deliver on that promise. Hence is what I said, you actually underwrite a company and a partner, not an asset itself. This region, I think it's one of the few that you cannot just go buy 20 PSVs, get a friendly guy to run it, and you're up and running. I think first you find your partner. First you see what differentiates that partner from the next, what sort of level of access there is to projects. Very interestingly, in this market, the projects that support offshore are very public. You know what ADNOC is spending. You know what Saudi Aramco is spending. There is full visibility of that. So you can see whether what people say about how they will execute things, matches reality. And building on that, you can actually build your JV with a plan to be executed on the basis of demand that's visible. Cash flow will follow, because all these projects are long-term projects, and we've been discussing whether oil demand might drop and Saudi Aramco cutting barrels, but at the end of the day, we're talking about 20-year expansion programs running in the region. So if one or two are postponed for 2 years, it doesn't move the needle much.
Great, thank you. And then Nadeem, if I could turn to you, just because we've just to cover off the equity piece, because you've been sourcing various different sources of equity, whether it's wealth funds, private family offices. Could you just tell us a little bit about your experiences of dealing with the different types of equity that you've worked with, and again some of the challenges that go with different types?
I mean, so look, Bridgefort was effectively a carve out from a large US private equity fund back in 2018. We set up a business in the Isle of Man with institutional backing, and we acquired our first fleet of ships. And from then, we grew the business, and then in 2020, we got approached by a large sovereign wealth fund in the region to, on the back of some investment, to come and set up an office, and now we have a regulated business in ADGM. And since then, we've acquired some vessels, as I mentioned before. We're mainly in the container space. I would say some of the challenges. This is not a very fast-moving part of the world when it comes to capital raising. It takes time. It's very much relationship-driven. You have to be here. I think the idea that you can come and visit every couple of months and keep those relationships going is probably not how it's going to work. Sovereign wealth, I find quite nice to deal with. They're hands-off. We have a long time frame to look at investments properly. We're not under pressure to deploy capital. They're very supportive, and we probably have 10 to 12 years in terms of investment realization. When it looks on the institutional capital side, some of the issues we've had, I guess, is ticket size. They want to get involved in big projects as they focus more on kind of credit funds, and they want to deploy hundreds of millions of dollars at any one time. That's a nice problem to have, but it's a problem. There aren't many deals that you can do on fleets that kind of go into that size bracket. We've done a few deals in the family office space, both in Europe and also in the UAE. This tends to be, one or two vessels, which we kind of like because it gives us the flexibility to look at single asset deals. Maybe there's a bit of an angle we can have in and get some good sort of value there. The issue with family office money is, regionally it takes time, and depending on who in the generation or who in the family you're talking to, you could be led up some garden paths. But we found when they do commit, they follow through. They want to be very, very much involved. So coming from an institutional background where your investors would come and speak to you once a quarter, or you'd just have a board meeting and you'll touch base, these guys want to be involved in every main decision, which again is fine, but it just takes that different kind of investor relationship approach. So I'd say here, look, since we moved, it's been great for us. We have a very supportive sort of cornerstone investor. Every deal we brought to them has been approved. We're not under pressure to deploy capital, which is great. It allows us to kind of take our time and assess each individual opportunity for its merits. We are now looking at putting together smaller deal sizes with family office money. Institutional capital, that we have a good network, and we're talking to them consistently, but it's hard to find a project really that suits all their requirements, whether it be sort of sustainability, whether it be sort of returns and size. So we are a small team. We're flexible. I think that's one of our merits, is that we can look at small deals that are, let's say 3 to 5 million, and we can also accommodate larger sort of, 20, 30, 40, $50 million deals.
Great, thank you. I'm conscious we're moving towards the end of our allotted time, but I think from what we've heard today, I mean, there's such diversity of capital available to the shipping market. I mean, it's just knowing where to look, whether it's with National Bank of Fujairah, with Iraklis or Souren at Australis and Neptune, respectively, but accessing capital through the equity markets and through JV structures as well is another option available as well. So I'm quite keen to actually get some questions out of the audience, because there haven't been many opportunities so far. So, and the team wanted questions, they told me.
Thanks. Questions, please, from the audience? Finance in the region? Anybody? No? Do you have one final question here? Just for the, like a 1 minute each across the...
I think the question I'd like to put out, and I'll maybe put it towards Nicholas, and then, because I think everyone's going to have a bit of a view on it, is because one of the key financing products that we haven't really spoke about is Chinese leasing, which has been quite prevalent in the region, whether it's through refinancing or whether it's through the new building programs. But can you say a little bit about what you've seen from that perspective? Because we don't have a representative on the panel, so it's the one point that we haven't covered off. So if you could give us your view, and then if others want to add in as well, that'd be fantastic.
Yeah, I think Chinese leasing in general, not just for the region, has become the new alternative finance provider. They've been quite aggressive in the last year or so. That stems from the fact they got repaid from large conglomerates across all sectors. One issue that we see when dealing with them, especially on the offshore side, is a few of them have burned not just their fingers, but burned a lot. and they're a bit reluctant on investing on the offshore side, but they're okay with the region. Middle East is a core market for them as well, a new but core market. And of course, they can provide longer-term financing, higher LTVs, generally lower price, but they focus very much, as in every other market that they invest in, on corporate structures and some sort of long-term employment. The convenience clause is not as much of a concern because they understand how this market locally works. There is a convenience clause, okay. Has it been triggered in the past? Probably not. And there is also the other side that says, okay, even if you don't have it, how do you go against ADNOC? How do you go against Qatar Energy? How do you go against Saudi Aramco in the event of cancellation? So I think this is something that's good to have. And Chinese lessors understand that this is also something that's good to have, but it's not the end of the world. So the corporate structures are more important for them. But yes, both on the shipping side, they've been more active on the conventional shipping. They've done deals in the region, quite a few, also with the only publicly listed entity on the Dubai Stock Exchange. So yes, they're there to supply capital in this side of the world as well.
If I just made one comment about that, because again, coming from Greece, we have seen the Chinese leasing spree over the last 10 years, and they absorbed a huge piece of the market over the last 10 years. At the same time, I think over the last year or so, we see a bit of reluctance for companies to put all their eggs in one basket because of geopolitical risks. So we have seen some of the larger groups actually scaling down their exposure to just a single or two source of capital and just spreading their eggs across more baskets, which is very prudent. I'm not saying it's anything wrong, of course, with Chinese leasing, obviously, but I'm just saying diversification plays a greater role, I think, nowadays.
I think what I would like to add is that the only problem that the ship owners will face while dealing with the Chinese leasing is that if things go in the wrong direction or the market, there's a downturn, that's when you will face the heat and the problems. So like, in case of, dealing with a bank, things are very different because the banks behave more mature in terms of restructuring or refinancing, but we have not seen that trend on the leasing side. And especially during COVID, we saw that, there were a lot of loan accelerations which happened during that period.
And I think the point you mentioned earlier about being on the ground, the relationship-driven nature of your business kind of enhances that. And I guess, Souren, similar from your perspective as well.
Yeah, exactly. I think Bilal obviously has a banking approach to the relationships where they offer products in relation to financing the working capital and such. But just as Nicholas said, there's been a lot of growth in the entrepreneurial side of shipping here, where they might be not accessing financing from banks just yet. So combining that relationship approach that we take with having boots on the ground and capitalizing on the growth and the entrepreneurial spirit in shipping here has been quite good for us. So we've done quite a lot of business with the solid ship owners, but relatively new or relatively small.
And at the end of the day, I would just say one key point that I think we should be raising more and more frequently: there is not enough supply of capital for what's coming. It's simple as that. So I think there is enough business for Australis, for NBF, for all the players, and even maybe if you double that, still probably would not be enough. Because if you look at the order book, if you look at the price of the vessels, just do some simple calculation, how you're going to fund that. So, that's why I don't think there is a fierce competition among any of us among here.
Well, that's the message I hear, kind of having these similar discussions, whether it's in Europe, whether it's in the Middle East, or whether it's elsewhere. It's there is room for all of the financiers in the capital structure because you all often offer different things, and what's right for one transaction isn't right for the other. So, super. Well, thank you very much. I thought it was a really interesting discussion. Thank you all, and thank you very much for your attention.
Thank you.